Good morning. We will pay attention to the transactions recorded according to the two different inventory systems. So when we record entries according to the perpetual system, we will use the inventory account during the year and the cost of sales account every time when goods are sold or returned by debtors. When the periodic inventory system is used, we don't use the inventory account during the year and there is no cost of sales account. We already know that there are a difference between the perpetual and the periodic system and that the transactions accounted for depends on the inventory system. So you have to look at the inventory system to determine whether you must use an inventory and a cost of sales account. If the transactions are accounted for in different ways, the subsidiary journals and the ledger accounts must be adjusted for the specific accounting system. Only entries relating to inventory and cost of sales are affected by the two inventory systems. All the other entries are recorded in exactly the same way, irrespective whether you use the periodic or the perpetual inventory system. We will pay attention to cash sales transactions now. Cash sales is 200 Rand and the cost of sales is 90 Rand. When we use the perpetual inventory system in the cash receipts journal, we will have a column for bank and sales, and we will have a cost of sales column. In the periodic inventory system, in the cash receipts journal, we will only have a bank column and a sales column, and we will not have a cost of sales column because we don't record cost of sales. So when we transfer the information to the general ledger, it will also be different in the two systems. Because we sold goods for 200 Rand, the bank will increase with 200 Rand. Sales income will increase with 200 Rand. For the sales transaction, you will record exactly the same entry in the periodic inventory system. But when we get to the cost of sales, we will show that the expense for cost of sales increased with 90, inventory decreases with 90, and there will be no entry for cost of sales or inventory in the periodic inventory system. The effect on the accounting equation: assets will increase with the money received. Equity will increase with the sales amount because it increases the profit. In the perpetual inventory system, you will show that the inventory decreased and that the profits decrease with the cost of sales. In the periodic system, you will not record anything for inventory or cost of sales. We will pay attention to cash purchases transaction now. You purchase goods by check 4,000. In the perpetual system, you will write the 4,000 in the inventory column because you want to show that the asset for inventory increases. In the periodic system, it will be entered in the purchases column because you are not allowed to use your inventory account. In the general ledger, inventory will be debited in the perpetual system to increase assets. In the periodic system, purchases will be debited to increase expenses. In perpetual, the assets will increase with 4,000 because inventory increases. The bank will decrease assets with 4,000. In the periodic system, the bank will decrease assets with 4,000 and equity will decrease with 4,000. Goods sold on credit and returned by debtors. Goods sold was 8,000 Rand and the cost price of the goods is 5,000. In the perpetual system, you will have a column for sales and for cost of sales. In the periodic system, you will only have a column for sales. In the debtors allowances journal, you will have a column for debtors allowances for the 800 And in the periodic, you will also have the 800 under debtors allowances. But you will have a cost of sales column in the perpetual system, and there will be no cost of sales column in the periodic system. In the general ledger, the debtors will increase with the sales price of 8,000, and the sales account is credited to increase income with 8,000. This same entry will be recorded in the periodic system to indicate that debtors increase with 8,000 and sales increase with 8,000. In the periodic system, no entry will be recorded for the cost of sales. In the perpetual inventory system, we will show that cost of sales increased with 5,000 and inventories decreased with 5,000. When the goods are returned, we will indicate that debtors' allowances increase with 800 and the debtors owe us less money, 800. In the periodic system, we will record the same entry for debtors' allowances 800 and debtors' control 800. There will be no entry in the periodic system for the cost of sales and inventory. So cost of sales is decreased with 500. Inventory is increased because the inventory was returned to the business. Assets increased with 8,000. Equity increased with 8,000 for the sales. The same entry is recorded in the periodic system. Then the additional entry will be recorded for the cost of sales. So inventory decreases assets and cost of sales will decrease the profits. When the goods are returned by the clients, you will indicate that the debtors owe less money, so assets decrease. Equity will decrease because you are not selling the goods anymore, so you are not making that profit. And then additional entry in the perpetual system will be recorded to indicate that inventory increased with 500 and the cost of sales will be credited with 500. That means we decrease cost of sales, and if the expense decreases, the profit increases with 500. Goods purchased on credit for 7,000 and returned to the suppliers 1,400. So in the creditors journal, you will have a column for inventory, and in the periodic system, you will have a column for purchases. In the creditors allowances journal, you will have a column for inventory in the perpetual system, and in the periodic system, you will have a column for creditors allowances. Because we don't use the inventory account in the periodic system, we will create an expense for purchases of 7,000, and we will show that the expense for purchases decreases in the creditors allowances account. When the goods are purchased, the creditors liability will increase with 7,000, inventory asset will increase with 7,000. So we will show assets increase, liabilities increase. In the periodic system, the creditors will increase with 7,000, so liabilities increase, but now we record the entry in the purchases account on the debit side. Purchases is expense, expenses decrease profits, so owner's equity will decrease with 7,000. For the goods returned, we will indicate that the creditors will decrease with 1,400, so liabilities decrease with 1,400. That is done in both methods. In the perpetual system, we will indicate that the asset for inventory decreases with 1,400, so assets decrease with 1,400. In the periodic system, we open a creditors allowances account when we return goods, and we credit it with 1,400. Creditors' allowances is a nominal account, so it will affect owner's equity. Any expense on the debit side will decrease equity because the expenses decrease profits. Any income or expense on the credit side will increase the profit, so therefore the owner's equity increases with 1,400. This purchases account and creditors allowances account is actually the expense is purchases, the reduction of the expense is creditors allowances. At the end of the financial year, we will transfer this creditors allowances to the purchases account. Drawings and donations. The owner took goods at cost for his own use, so drawings will be debited. In the perpetual system, inventory will be credited because we want to reduce the asset inventory and show that we have less inventory available to sell to make a profit. In the periodic system, when we buy goods, we debit the purchases account, so we create an expense. If the goods are used for another purpose, not for selling to make a profit, you have to reduce this expense, so we will credit the purchases account to reduce the expense with 100 rand. Donated goods to the local school for 50, so donations expense will be debited. Inventory is credited in the perpetual system because we want to decrease the asset for inventory. We have less goods available to sell. In the periodic system, the purchases account is credited because we want to reduce the expense for purchases to show that the expense decreased and it was transferred to the actual expense that must be recorded in the financial statements. Okay, the owner took stationery from inventory for use in the office. So he has to create an expense for stationery for the 40 rand. The inventory must be credited to indicate that the asset decreases. And in the periodic system, the purchases account will be credited to decrease the expense. The various reasons why the inventory was taken will be debited. So you will debit drawings, donations, stationery, and in both methods you will do that. In the perpetual inventory system, you have to show that the inventory that we purchased with the purpose of selling to make a profit was now decreased, so our asset decreased. In the periodic system, when we bought goods, we increase the expense on the debit side. So any goods that are purchased with the purpose of selling to make a profit will be recorded on the debit side of the purchases account, that is the expense. If we use any of these goods for another purpose, we have to reduce the expense on the credit side. So therefore, all those amounts will go on the credit side of the purchases account. In the perpetual system, the inventory will be decreased, so assets decrease every time. It was expenses, so expenses will decrease the equity. In the accounting equation for the periodic system, we don't have this asset, we have an expense. So the expense was decreased every time, so we reduced the expense for purchases and we created another expense. So the purchases account, because it was credited, will increase the equity because you increase the profits if you reduce expense. Stationery, donation, drawings will reduce the equity because expenses decreases the profits.